Hello, everyone, and welcome to another Wall Street from Main Street podcast. Joining me today is a returning guest, Bo Polny. He runs his own website, Gold Forecaster. Bo, welcome back.
Thank you, John. Appreciate you calling me up.
Thank you. First question I wanted to get to is you just got back from a resource investment conference in Vancouver, I believe. And I was just wondering, what was the sentiment at the conference in terms of precious metals?
I got to say, it was actually a little bit on the up and up. We've had a nice little push in gold off the 1130 low, and so we're pushing up to the 1300 level. And you had a little spark of energy there. You had people talking, a little more excited. Everybody, the mining stocks have all pushed up a little too, and so the energy was definitely good. Considering when I was in London at the first part of December, gold was lower in terms of price, and so the energy definitely here in Vancouver was on the up and up. Gotta say that for sure.
Okay, and there's been a lot of forecasts for a big move coming at the end of 2014 for gold. In fact, one guy unanimously, his name was Harvey Organ. I'm not picking on him or anything, but he actually said silver could revisit 50 and gold to 3,000. Why do you think towards the end there wasn't a big move towards the end of 2014, just in your opinion?
Looking at my cycles, I also have a long-term count that I've been looking at. It's a weekly count and a quarterly count. And I was looking at a move into the latter part of last year also that still has, we are still waiting for. I don't know about Harvey's, I don't read him too much, but his numbers, they of 3,000 gold maybe are high, maybe not. It's hard to say. But in terms of cycle timing, I did several interviews the very, very first week of November. I was looking at a cycle low that was supposed to hit there. I did one actually with Kerry Lutz right on President's Day, and right within a day or two of that, the cycle low at 1130 hit. And so that's what I was calling for a low to come in right then, and that low, and then the basis of that conversation and the presentation was that November would start the next upcycle for gold. So, in my opinion, looking at cycles and timing, November should be the first month of the upcycle for gold. From that point on, gold's progressed higher in the month of December, and it's further moved along now in the month of January. So, a forecaster, or Harvey calling for these large numbers, I still see very significant price moves for gold. And not in the latter part of 2015, but actually, coming sooner rather than later. And heck, I sure hope Harvey's price of 3,000, becomes reality. But again, cycles give more direction, and the direction right now is up for gold. And looking at the cycle movement, there's good movement still in the months ahead to the upside. So Hopefully we'll get some very, very aggressive price movements very shortly, and we'll have to see what prices we reach. But I do know 1,300 is going to break pretty soon.
Yeah, I personally think that gold will finish higher this year. I just think in terms of demand, supply, and I don't think the Fed could raise interest rates without causing an economic catastrophe, in my opinion. So I do see, personally, gold going up. My question to you, though, as a cycle analyst, is it's had a good year this year. In 2014, though, the first 3 years, going from January to March, it had quite a run, and then towards the end of the year, it rolled over. It sounds like you don't see a repeat of that. Why is this year different, in your opinion?
I look at from the top of 2011, taking time forward all the way to November. on a 7-year count, that puts it to midway, 3.5 years. Very typically, that would come in for a cycle low. It actually did on the exact week. So if that cycle low holds and we continue to progress higher from here, historically, once a long-term wedge breaks, which is we've got a 3.5-year wedge here, when this breaks, and it took 3.5 years of shorting to get the price down to these levels for silver and for gold. And so I believe that when the entities that be who have been, if you want to use the word manipulating or holding the price down, which is probably a better way to describe, when those forces are removed because they're not able to hold it anymore, you're going to see a dramatic rise to the upside with the price of gold. You can actually start to see that price rise already when you cross-reference that against virtually all the world currencies. It's only not apparent or easily apparent when you look at it priced in U.S. dollars. But gold has broken out against virtually all world currencies. It broke out against the euro 2 weeks ago, Australian dollar, British pound, the yen. It broke out against the yen in November. So all the currencies are showing weakness relative to gold. So gold is now breaking out against all world currencies. It's just that gold is the strongest in U.S. dollars, so you won't see the actual breakout until it'll be breaking out against the U.S. dollar last. And then also an interesting thing which happened, I think everybody knows, with the Swiss, when they depegged from the euro. It's interesting, but when you look at gold priced in Swiss francs, and believe it or not, the Swiss franc now becomes the strongest currency in the world if you cross-reference it with gold. So gold priced in Swiss francs is the lowest, and up until they depegged, it was in second position. Now the gold priced in Swiss francs is the lowest, and in price in U.S. dollars is now second. So that was a very dramatic change, and now that this change has happened, I wouldn't be surprised if we see other countries start doing similar type things.
Yeah, in terms of breaking apart from the euro, some people expect China to actually depeg from the dollar, break their peg, so that wouldn't surprise me. I think that's a longer term. But you brought up a great point in terms of the gold rising in other currencies. And last time in 2008, based on my past research, I didn't look this up because you just brought it up, so it just came on the top of my head, but it actually bottomed and started rising in other currencies first before it went against the dollar. And that basically what you said in terms of a cycle analyst is history is important, and you sort of see a bottoming in terms of foreign currencies get priced in gold and dollars being priced in gold. You sort of see that same sort of trend happening.
Exactly. Well, an easy way to see that would be take a weekly chart on gold price in any currency. Take that chart back roughly 3 to 4 years, okay? And what you'll end up seeing are massive wedges that have formed. Now, there's 3 types of wedges. One is an ascending wedge. The second is just a neutral wedge, and the third one is a descending wedge. But regardless, they're all wedges. And so gold price in virtually all the currencies was in either a neutral wedge, which was the most common, and there was one was an ascending wedge, and that was a gold priced in the Russian ruble. And then the descending wedge was gold priced in U.S. dollars.
Uh-huh.
And the key is, if you look at those charts, you'll come to realize, I actually did I posted this on the internet, I think in November, but those charts basically illustrate that gold now is breaking out to the upside of the triangle against all world currencies, okay? And the only reason it's less apparent relative the U.S. dollar is because it's sitting at or just at the upper cusp of the triangle, and it hasn't broken officially out of that triangle just yet. But all world currencies are now broken out through that triangle, and you're starting to get rises, aggressive rises, because once you break out of a triangle, the price movement becomes quite aggressive. And you can see it extremely clearly in the Russian ruble. But not only that, go look at the weekly charts on virtually all the world currencies, and you're starting to see, parabolic rises forming on the weekly charts. And so or on the daily charts. It's getting to be quite an interesting chart.
Yeah. And one other thing is you talked about in the conference the equity markets in terms of the cycle. Can you explain what you're seeing right now?
Well, I described long-term cycles for the equity markets, and my math adds up to December should have been a cycle final month, or not only final month, but the first month of a downward cycle. So we've basically had the equity markets rising for years here, and what I'm seeing right now as of the month of December, that should be the first month down of a long-term cycle to the downside now.
So you see a long-term down cycle. You don't see like a correction or a steep correction. You see a downward cycle.
It'll be down. It'll be up and down on the way down.
Okay.
So it's gonna, so you'll see corrections, and then a bear trend is lower highs and lower lows. So overall, I think the equity markets over time now, and we'll be able to look back for the months down the road, and we'll probably end up seeing lower lows and higher lows. So it's rolling over to the downside.
All right, that makes perfect sense. Not only that, the stock market, it seems since 2009 it's gone nothing but up, and the old saying is what goes up must come down. So it makes perfect sense. And my last question I wanted to get into was, on our last interview, someone left a comment saying, why do cycles matter? Because markets are so manipulated. What's your response to that? Because in my opinion, based on what I've heard, that this shows up in the cycle.
Well, without manipulation, what you have on a chart? It's called a straight line. You have to have manipulation that creates the cycle. People are the cycle. People are what make the cycle. And so if there were no people, every time, if there was no manipulation, you would just have a flat line or a rising line. You'd have no waves. It would just be going one direction or the other. So the manipulation that people describe is actually absolutely necessary because that is the cycle. And so that's the best answer I can give you. You actually need it because that actually makes a cycle. It completes the cycle.
Yeah, and you did call the top around 1900 and the cyclical low in June of 2013 and that November low. So it seems, based on proof, it sounds like it shows up in the cycle. So just to wrap things up, if people want to find out more about your cycle work, or subscribe to your newsletter, how can they do so?
They just go to my website. I'm offering right now about a week and a half to 2 weeks free. I'm giving it the January cycle movement. So if anybody's interested in what gold's expected to do in the month of January into the end of the month here, I'm doing what's called like a little sneak peek into January. So just go to my web page at gold2020forecast.com, or you can just send me an email at gold2020forecast@AOL.com, and I will send off the January cycle so we can watch it together unfold.
All right. Thank you very much, and thanks for that offer. I encourage everyone to go. I look forward to having you back on, Bo.
I appreciate it. Thanks so much, John.